Hello and welcome to episode 19 of the Alex.Nunemaker Mortgage Podcast for the week of October 17th, 2022. In market news, last week's CPI report is now in the rearview mirror. The damage is done. We can now look forward to November and beyond for the reports to come out and hopefully some better inflation news. We're going to see if the Fed's rate increases will start to take their bite, which I suspect they will. And as I had said before, it's going to be a bumpy ride, but hang in there. Let everybody else talk about the doom and gloom. But in the meantime, homes are still selling. Buyers are still finding homes. We're just in a different market and we have to adapt. So some reports came out earlier this week that I think are pretty interesting. So the Fannie Mae Home Price Index, that showed from Q2 to Q3, home prices rose 0.2%. And that's in the face of rising interest rates. So home prices nationally have really shown a lot of resiliency. Obviously, every market is going to be different. You're going to see some markets that are a little bit down, some are still up, but we're talking on average. At the same time, the National Rent Report from Zumper showed that for September, rent has reached an all-time high. So a one-bedroom apartment, get this, on average costs $1,503 a month, and a two-bedroom apartment is now $1,845 a month. And that always begs the question, when you have someone who's brought up whether they're on the fence or whether they should buy or whether they should rent, well, if you're not buying, you gotta live somewhere. And if you're not buying, you're renting in more cases than not. And that's no picnic either. You're gonna pay all-time high prices for rent that you're gonna lock in for the next year. So unless you can move in with parents or you have some other living arrangement, renting is no picnic either. So they always have to be comparing that versus the alternative. Next, in the mortgage corner, my buyers are now seeing seller concessions. Man, remember that? We haven't talked about that in like 2.5 years. In some cases, I've actually seen some properties marketed with seller concessions being given right off the bat. So the main demographic that's going to benefit is going to be your lower income, lower price point buyers, maybe first-time home buyers who got squeezed out of the market last year and the year before. So yes, there are plenty of no down payment loan options, but the pain point for a lot of those buyers was coming up with closing costs because the seller wasn't going to cover them. So it's a good time to reach out and rekindle those relationships for anybody who is in that boat. So yes, rates might be higher now, but they can potentially get into a home for a lot less cash to close potentially if they can get some seller concessions. Second, the main thing you want to make sure is that if you're getting seller credit towards closing costs, each financing programs has their limits on what you can get back. So no matter what the program is, the buyer can't get more than what their actual closing costs are. So there are those limits, but if the closing costs are under those limits, that's your cap. So as an example, FHA allows you to get up to 6% back from the seller. So if you have a $300,000 home, that's $18,000. We want to make sure that we don't end up in a situation where you've negotiated $18,000, but the closing costs are only $12,000. So it's important to reach out to the lender and make sure that we can utilize all those funds. And finally, our quote of the week. When you are enthusiastic about what you do, you feel this positive energy. It's very simple, and that's by Paulo Coelho. Have a great week. If I can help you or of any of your clients with any questions or pre-approvals, let me know. They can visit me at homeloanswithalex.com. Have a great week.